Welcome to Daily Tax Savings. This is Tony Novak here with a few points to save taxes and stay out of tax trouble. Today's topic is filing a non-compliant tax return. The word non-compliant in this case means a tax return that doesn't meet the requirements of the law. Yesterday's episode, we covered the options available to a CPA who's preparing your tax return. And normally it's really simple. If we can't bring the tax return into a state where it meets the requirements of the law, and we can't discuss and come to a solution in order to do that, the CPA must back off and simply resign and not file the tax return. Well, I mentioned that there is one possible exception, and I'm finding it more useful in small businesses lately, and that is to have the CPA file the tax return, sign the tax return, but include a statement, a notification to the IRS and to the state that we know we're not following the law. We have our reasons for not following it, and the government has its option to disagree with us and recalculate the tax according to as they see the situation. But the filing of the disclosure statement allows the CPA to remain not at risk of severe sanctions, monetary and possibly even licensing, and removes the risk of the most severe penalties with regard to filing a tax return that doesn't meet the requirements of the law. And I'm going to give one common example in the small business world that's, we talked about a bunch of times this year. That is a S corporation tax return, or an LLC that's perhaps elected S corporation status. Very, very common. You see all the marketing out there to file as an S corporation and save taxes, and so too many people are doing it not really knowing what they're doing or the risks of doing that. One of the requirements of doing that is that the owner shareholder must pay themselves salary. That means wage taxes and withholdings. In real life, in the real business world, that doesn't always happen. And so you'll see online a lot of CPAs will say, I just will not file that type of return. The IRS has issued some very nasty penalties particularly to CPAs that did that on multiple clients. But in the real world, I had one client who's, a couple, my clients are getting older and health isn't so good, and life is stressful, and businesses are barely getting by, barely paying the bills as it is, and paying any salary, setting up any payroll system is almost beyond the capability of some of these small businesses. We're talking about corporations that have net income significantly less than $100,000, and simply, normally you can't even hire a CPA with that type of income, or justify the cost even of running payroll. So after having suggested that they get rid of the S corporation, and that didn't happen, and here we are with a non-compliant situation, and a tax filing deadline came up a couple of days ago. So what we can do is file this disclosure, say, hey, we're basically, the disclosure says we're doing our best, but we admit that we're not meeting the regulations as they're stated, and we recognize the IRS can recalculate the tax, but like I said, at least we should escape the worst penalties. We're not deliberately hiding or doing something like unreported income, for example, that would get a much harsher type of tax penalty on an adjustment. Hope that makes sense. I'd love to hear any comments, thoughts, feedback on social media. I'm easy to reach, or If you want to talk one-on-one about your situation, that's easy to do also. Find me on the website, taxproblems.cpa, and we can schedule a time to talk. I'll be back tomorrow.